Thank you, everybody, for being here, hanging out with Uncle B. GameStop. Let's talk GameStop. 177.02 on the pre-market with, what do we got, 4 minutes to go before we open up for the day. And the company made two announcements today, and I heard news over the weekend that I like, and I thought I'd share that with you. If any of you are out there interested in GameStop, you've come to the right place, because a lot of us here are interested in GameStop, and we kind of like what we see, especially corporate. We really like what we see. And there's some interesting news. Number one piece of news that came out, the company officially announced that they have paid off their $211 million, I think it was $211, maybe $216 million debt that they had, the 10% debt that they owned. That's gone. They no longer owe $216 million at 10% interest anymore to anybody. That's gone. Hello. And that saves them $21 million a year in interest right now. I did some just rough mathematics, and I mean, I kind of winged it. When you don't pay $21 million in interest anymore to your banker, and you've got 73 million shares outstanding, you do the mathematics, and I come out to about 30-something cents a share per year that you're not paying interest for. In other words, this is an expense you had, a 33-cent per share expense that you don't have anymore. That's just flowing over to the profit side of the business, because you obviously made enough money coming in the front door to pay that loan. You paid the principal, and or you at least paid the interest every month or every quarter. You don't have to come up with $21 million anymore per year to make the interest payments on that money. So that's the first. In other words, the first $21 million you make doesn't go to these guys. It stays in the treasury of the company. That's towards the bottom line of the company. That's 33 cents a share. Now, I'm thinking this company, being a growth company that they are, and becoming an e-commerce company that they are and going to be, I was trying to figure out what would GameStop trade at on a price earnings multiple going forward. Some of you ask me all the time, what is a price earnings multiple, Bruce? I hear this all the time. What the hell does that mean? And a price earnings multiple is simply this. If a company earns $1 a share profit, it will trade at a multiple of that $1 a share in the open market. And it depends on the kind of business they're in. That tells us how high the multiple will be. For example, if you want to buy right now Goldman Sachs or JP Morgan, you're talking about a PE multiple around 8 to 12, very low PE multiple. You want to buy Apple right now? You like Apple? Who doesn't like Apple? Everyone likes Apple. Apple Computer right now, if you're buying it, you're paying 29.5 times earnings. So let's call it 30 times earnings. So if Apple were to make $1 a share profit, it would trade at $30. Well, Apple trades at $131 a share. So you just do the simple math and you figure out, well, these guys are making like $4 something a share, aren't they? 4 something a share times 30 is $130 a share. Okay. Well, Amazon, they're in the e-commerce business. We've all heard of those guys. Well, the Amazon people, they're trading at 66 times earnings right now. So if they made $1 a share, they'd be trading at $66, right? Right. Well, they trade at $3,400 a share. They make a lot of money per share. They don't make $1 a share. They make an awful lot of money per share. Earnings per share of $52 a share. That's what they earn. Now, if they were to split their stock 10 for 1, their stock would go from $3,200 a share down to $320 a share, and their earnings per share would go from $52 to $5.20. But it's all relative, because everyone would have 10 times as many shares. It would still trade at 69 or 66 times earnings. But let's get back to GameStop. If GameStop were to trade at 100 times earnings, because the thinking is that they're going to grow on a percentage basis on their earnings a lot faster than Amazon will, because Amazon is a $1.75 trillion company, where GameStop is a $20 billion or $10 billion company. The thinking is I'll have a higher PE multiple. So if it's 100 times earnings and they're saving 33 cents a year on their interest charges, that's bottom line money, that's $33 a share for the stock price. That's $33 a share just based on paying off that loan that they paid off with 10% interest. That's just that, all right? The thinking is, and my thinking is, that these guys could make a couple of bucks a share profit in the next year, maybe more. Well, if they make $2 a share in profit and they trade at 100 times earnings, it's a $200 stock. But if next year the thinking is they're going to make $4 a share profit as they go into e-commerce and become more efficient, at 100 times earnings, that's a $400 stock based on PE multiples, just on corporate PE multiples. Forget about short squeezes, gamma squeezes, all the other stuff. Just talking corporation stuff. This stock, GameStop, might all of a sudden be perceived to be undervalued. Holy moly! $21 million savings and interest charges. Cash in the bank. They had the money. They now have $900 million cash after they paid that off. Wow, $900 million. I mean, I look at it this way: if they actually owed $1.2 billion in debt, and they raised this money they raised last week, paid it all off, and had no cash in the bank, but they just got rid of $1.2 billion in debt, and they were paying 10% interest on that debt, that's $120 million a year in interest charges. See, that's 6 times as much as what they just paid off, okay? So just think about this. Just bear with me now. Hang on. If they just paid off $1.2 billion that used to cost them $120 million in interest, and you turn that $120 million into the shares, you're talking about a company that would now be making $1.50 a share in profit. Times 200 times earnings is $300 a share. You see, that's how powerful the $900 million in cash is right now. The $900 million in cash they're sitting on is their money. They don't owe anybody that, any of it to anybody. They get to use that money to expand their business, and they're going to make far more return than a 10% interest charge they would have had in the past. So the $900 million going into their business or buying something else or expanding elsewhere is going to make them more than 10% return, which justifies a much higher valuation on the stock. You see, cash is king. You got to have it. They have it. Other news that came out from GameStop. We heard that they have picked up a new warehouse as a fulfillment center in a place called York, Pennsylvania. That location of York, Pennsylvania is between Washington, Baltimore, Philadelphia, New York City, Pittsburgh. They are surrounded by 45 million people within an hour and a half from that warehouse. Yeah, figure it out. All the Northeast distribution of GameStop's merchandise is going to be out of York, Pennsylvania. Grapevine, Texas, they've got a warehouse down there that will handle the Southeast and the Southwest for now. York, Pennsylvania will probably handle the Northwest. In Mississauga, Ontario, Canada, that handles Canada. They got that one covered. I think they have another one in Australia, and I think they have another one in the UK. They have offices, they have warehouses all over the place. They will continue to do this. They will continue to announce new fulfillment centers, just like Amazon did for 25 years, from the 90s to now. They kept coming out every year or two with we have a new fulfillment center we're building. We're building one here. We're building one there. We're building one there. Because Amazon went global with their distribution network. And guess what GameStop is doing? They're going global too. And they can't just have a warehouse in Grapevine, Texas for all of the United States. Not gonna do it. Not good enough. So they're gonna have one in the Northeast. They'll likely pop one up in the Northwest. They'll likely pop one up in the Southwest. And that will give them 4 corners of warehouse exposure for deliveries. Same day, next day, 24-hour, 48-hour delivery. You gotta be close. That's what these guys are all about. GameStop is becoming an e-commerce powerhouse. Again, thank you all of you for being here and asking these questions. I appreciate it.